Hello, hello, hello. Hey, everybody. Can you guys hear me? All right, cool. So, welcome. Today is, what is today? Today is Tuesday. So, we're meeting today because yesterday was Martin Luther King Day and the market was closed. So, I find it more valuable when we can meet on days when the market's open. So, here we are. Let me see if I can see how many people. I don't see anybody in the chat yet. Are there people on here, Nina? Send me a message and let me know in the chat if you're here, if you're watching, where you're checking in from. All right, cool. So I have people watching. Good afternoon. Good afternoon. Thank you. Cool. So let's just jump right in. Today's Tuesday. Like I said yesterday, the market was closed. I haven't had anything in this account for a little bit, but I wanted to kind of go over this particular account. So here I pulled up kind of like the transactions. So this live stream, just for those of you who might be new or maybe you're not familiar, I started this live stream as kind of like a platform to show you live trades inside of a real account because the paper trading has a lot of limitations. So paper trading, first of all, you can put an order in when you're trading in a paper trading account. You can put an order in that might not fill, even though it's a correct trade that should fill, because it really just doesn't work, the same as real accounts. So I thought it would be better if we use an actual account. So I moved $5,000 of a different account into this account, and I've been trading. And here are the transactions here. And the purpose of having these live streams and walking through this with you is so you can see everything kind of like in real time, right? So you can see the pages that I look at, and then you can see exactly how you can replicate that in order to be successful. I'm not telling you what to trade. I'm not telling you hey, you should trade this ticker, or you should trade that ticker. But really what I'm trying to do is help educate you and show you exactly how do you find a ticker to trade? What are the things that you look at? What's important? What strike price should you choose? What expiration? How do you know how much money you made? What sort of pages do you look at? So that's the purpose of these live streams. So let me know in the Q&A. So I have the Q&A up here as well. Let's see, somewhere up here, right here. So let me know in the Q&A as you guys have questions. This is also an opportunity for you guys to ask real live questions and get real live answers. So that's a pretty cool thing. So as I was saying, I don't have any positions in this account because before we had these Mara shares called away, right? So let's kind of go over sort of what this account has done since I started, how much money it's made, right? And how it's progressed. And then let's talk about putting maybe another trade in for today because I don't have any positions. And then let's go through the Q&A. So there's a couple of things that I look on the Schwab site, right? So I look at the transaction history. I look at the realized gain loss page. I look at the positions page. So we'll see on this account, here's my positions. Now, some people look at all this stuff on the Think or Swim page, which is here, right? So here's the Think or Swim page. And this shows you this $5,000 account, $5,001. I don't look at my positions on this page. You can if you want. I find it better and more, just easier and more educational to look at the Schwab page for the positions and the transactions and the history and such, and then look at your Think or Swim just to put your trades in and look at charting and option chains and things like that. So let's just kind of do a quick recap on what this account has done since I started, right? So when I started this early December, I sold a Riot put. What does that mean? When you sell a put, you're committing to buy shares if the stock price drops below the strike price before the contract expires. You're paid a premium, right? You keep that premium no matter what happens. And if it doesn't drop, you don't buy the shares, but either way, you keep the cash. So I had sold this Riot put. I did this one accidentally. So I sold also an Applied Digital. I meant to do this in a different account, and I did it in this account accidentally. So that's why perhaps you might not remember that, but I sold this Applied Digital put as well. Here's the premium that you collected, right? The fee, I don't really look at this so much and I don't talk about it often, but what that is that's the ticker charge or the transaction charge for making the trade, right? So anytime you put a trade in, you sell a put, you sell a call, whatever that is, you pay a transaction charge. So typically it's very inexpensive. Now, you do want to pay attention to that more often when you're selling things for very inexpensive, right? So like this, I only got paid 20 bucks, 20 cents equates to $20 getting dropped into my account. So when you're paying a transaction charge of 66 cents and you're only making 20 bucks, it's like on a percentage wise, it's a greater percentage than, let's say, if I was selling a put on Tesla and taking in $300, $400, $500 and then paying a 66-cent fee. So you do want to be a little bit more conscious the smaller your account is on these particular fees, right? And then this kind of shows you, now this is the transaction page. So this shows you kind of, okay, what happened with this Riot contract? Well, this one expired worthless. So it's going to show you here when it expires or if it gets assigned, right? So this kind of shows you, okay, like a few days later or later on in the month, 12/22, I had sold this Mara put. You guys might remember, those of you who have been here for a while. And then that trade actually got assigned and I bought the shares. And then I sold a covered call against it. Now, what does that mean? That means that you are committing to sell your shares if the price goes higher, stays at that price or goes higher than your strike price by the time the contract expires. Again, just like the put, you keep the premium no matter what happens. Doesn't matter where the price goes. Here's the advantage of selling options, and I want everybody to hear this loud and clear. The advantage of selling options is to create income for yourself, right? Create income on a regular basis, whether it be weekly. Me personally, I like weekly. Some people like monthly. Some other people, like, they want to go out 2-3 months. And sometimes they do that because they get paid a higher premium, more of a premium. We're going to walk through that in a moment, and I'm going to show you the difference of that. But it goes back to the premise of, listen, if you're looking for stock gain, don't sell options. You're in the wrong game, right? So selling options means you want to create yourself income no matter what happens on a consistent basis. So you want to try to understand that, and maybe options is not for everybody. Like, sometimes I've had this discussion the past few days on rolling, right? Rolling puts, rolling covered calls. And I'm going to be honest with you guys, it becomes very frustrating for me because I don't understand why and how people don't see clearly that rolling is not smart. And we don't have to talk about it that much in this session, but my point is this, and the reason why I'm bringing it up. If you're a person that wants to make money on stocks, right? If you say, oh my gosh, I there's this new stock that came out, Applied Digital, I'll just use that as an example. And they got all these great things going on, and it's a $20 stock, and I think they're amazing. And I think that stock is going to go to $100, and I want to trade that and hold that for a long time. I'm not saying that strategy is wrong. That's accurate for many people. If that works for you, that's good. However, when you're a stock trader, you are only making paper gains, and you have to know this. If you don't know it, you shouldn't be trading, because these are very much what I'm talking about now are the basic fundamentals of trading stocks and trading options. When you're trading stocks, you are only getting paper profits. You'll have paper losses. What I mean by that is, okay, I buy 100 shares of this stock and it goes up or it goes down or wherever it goes, right? It doesn't matter. It's not affecting your pocket. It's on paper. For me, the reason why I don't trade like that, and I only trade options. Now I'll use stocks, when you get assigned shares via selling a put, and then you sell a covered call. So I use stocks, but I do that with the intention of creating income, because I don't know. This is just my thought. And if this is not your thought, that's totally fine. But then my channel is not for you, because all I care about is making income. And the reason I do that is because, I mean, come on, guys. What pays for you to do stuff? I just ordered Chinese food for me and my daughter. I ate really quick because it came like 10 minutes ago. Fucking $100, $95 or something like that. Sorry, I shouldn't say the F word. My point is this. I don't know. Can you pay for Chinese food $100 with that stock gain that's on paper that you don't recognize at all? You know, as a matter of fact, you don't recognize it until you actually sell that. Who knows when down the road? Maybe if it goes up. No. So I don't believe in that. I believe that there is a fundamentally broken part of stock trading and Bitcoin trading for that matter, because it's great. Like, you buy these stocks and it goes up, but you can't actually spend any of the money unless you sell your shares. Trading options like alleviates that broken system, right? So it lets you create income that you can do stuff with. So if you are trading options for income, don't roll your contracts. And the reason why I get frustrated is because I get comment, and I appreciate the comments, so don't take me the wrong way, please. I appreciate the comments. People put comments on my YouTube. Man, I went from 500 subscribers to 5,000 in a very short period of time. And I love this community, and I love a lot of you viewers that are posting things. But my point is this. It gets frustrating sometimes reading, I'm just going to say it in plain English, like the dumbest comment over and over and over again about rolling. So if you own 100 shares of stock and you sell a covered call against it and that stock shoots up to the moon, let me give you an example. I'm not going to call anybody out, and I haven't replied to this yet. Okay, the coach on my Discord rolled a bunch of cash secured puts today for a profit on a later expiration to give the stock time to recover or to be assigned a better price. What are your thoughts on that? So I appreciate the comment, but here's the thing. I'm going to answer my thoughts live instead of typing it out. Bless you. Here's my thoughts on that. If you have a coach on Discord that's telling you to roll your puts because you want to give it more time, and you're not understanding that you're actually taking a realized loss if you buy your put back and pay more than what you originally got in premium, if you have a coach that's not explaining that to you, you have the wrong coach. It's so interesting to me because I'm gonna pull up YouTube right now. I'm gonna pull up YouTube and I'm gonna show you. I'm gonna get to your questions in a moment too, but I wanna really hit this home to you guys. Rolling a covered call. I want to show you how many stupid people are on YouTube telling people what to trade or trying to help people trade that are just selling courses. And I'm not saying that selling a course is a bad thing, but there are people that just sell courses and never made any money trading, or sell courses and made money trading at the same time. Because if you just I don't know, just go through some of these things, how to roll a losing covered call. There is no such thing as a losing covered call, guys. And this cracks me up because he had 40,000 views. And if I pull up this guy, he has...
hot dogs for you.
He has 135,000 subscribers.
2% cash
and he has to be providing the most ignorant information I've ever seen.
The active cash credit card from Wells Fargo.
There is no such thing as losing covered call.
Hello, everyone. I'm Michael.
Let me I feel like am I getting hot-headed a little bit? Let me go into my questions and answers, and I wanna answer some of the questions or comments, and I'm happy to go through this again, but I have gone through a couple of videos recently that showed you don't do that. If you have shares and you sell a call and the price goes higher, get rid of your shares. It's okay. The stock did, your trade did like it's supposed to do. That's actually a good thing. So if you buy that contract back, you're going to pay more than what you got. That means you're taking a realized loss. You want to do this, you guys. You want to pay attention to these realized gains, realized losses. And this will show you. If you don't know, so many people, I swear I wish I had a freaking penny for every time somebody said this. They look at the net result. I rolled my contract out and I made more money. Bro, you did not make more money. You're not understanding the basic concept, the basic fundamentals of options trading. And I'm not picking on anybody, but you really have to like understand the foundations because you got money in the game, right? And you want to know what you're doing. When you buy your contract back, if you have a short call, right? I have 100 shares and I sold a call and the stock went higher. If I buy that contract back, I'm going to pay more money than what I originally got because the price went up. It's more expensive. When you do that, it's two legs to the trade. It's not like I buy it back and I sell another one. Yes, but it's two separate legs. You buy that contract back, you're going to see red here. You're going to see a realized loss. Why in the world, if you're making money, would you trade that winning trade in for a possible maybe make more money down the road? If you do that, you should not be trading options. You should just be trading stock. And this is the wrong game for you. So if that's not clear in any way, please let me know in the comments. I'm going to read some of the comments now. Let's see. Somebody's from Denver. Appreciate that. Good afternoon. Texas in the house. San Antonio. Mumbai, India in the house. That's amazing. Good afternoon, everybody. Let's see. Somebody's writing a test. Will the New York Stock Exchange going on blockchain, meaning it will be 24/7? How will that affect option market? I don't know. I haven't followed a lot of that. Honestly, I don't really follow news that much in general. And it's interesting because a lot of people will ask me. My son asks me all the time, why aren't you watching the news? Why aren't you looking at what Bitcoin's doing or crypto or whatever? I don't know. I don't really pay attention to that. I think there's only so much time in a day and I can only fit so much stuff up here. And when it's important or something like that, it'll kind of bubble to the surface and somebody will tell me about that. So I'm not sure about 24/7 in the account. But let me ask you guys, let me know, and I love when you guys send emojis. Keep them coming. That's cool. Thank you. Let me know in the chat here. Because I really want to make sure people hear me about this whole rolling thing. Because I'm telling you, I have gotten so many comments and I feel like they're the same comments. I spent like some of these videos, I don't know, let's see. Like, for example, I think this video I did yesterday, why selling options isn't working for you. This was like a 12-minute video, and I swear that video took me like 4 hours to do. It took me a long time to like, and I appreciate it. Look at everybody likes my videos. Thank you so much. Lots of views, lots of comments, lots of likes. Appreciate that. My point is this. It takes me a long time to put those videos together. It takes me a while to put together the script, and then I record it, and then I edit it, and then I like create the thumbnail and add the description. I want to like try to be SEO optimized because I want people to see my channel. I don't want people going to this like goofy guy over here, how to roll a covered call. He doesn't even know what he's talking about. And I'm not picking on his age, but he does look like he's 20-something years old. And I don't mean that in a bad way, and I'm not picking on him, but I am picking on him for this. He's telling people like, you know, when your call goes up, here's how you fix it. Bro, there's nothing to fix in that scenario. So I'm trying to like capture as many people so they don't make stupid mistakes and stupid decisions. So let me know in the comments. Does that make sense? So just to be super clear about things, here, and it's not that hard, guys. Okay, I start with I sell a put, right? I pick what stock do I want to trade? What stock do I believe in? All stocks go like this. It's like a fact about the stock market, right? It goes up and it goes down. Good quality stocks will go up over a period of time. That's just how it is. It's like saying the sky is blue. It's not purple, it's blue. This is the same thing, right? So step one, you choose a stock that you like. In this account that we were talking about, I chose a couple different ones. I like Mara because, you know, I like Bitcoin. I'm a big believer in Bitcoin. And Mara is kind of an inexpensive stock. It was a $10 put. This is only a $5,000 account. If I have a $5,000 account, I do not want to pick a $50 stock to trade. Why? Because if I trade one contract and the price goes down, I'm not going to have enough money to sell another put. So here's the thing, guys. Get that rolling nonsense out of your freaking head because it's wrong. There are lots of ways to make money in the stock market, and my way is not the only way. I will tell you that. I am not a guru. I'm just sharing with you what has been working for me for many, many, many years. But there is this one thing that I know unequivocally without any doubt. Don't roll a put, and certainly don't roll your covered call. Like, without question, don't do that. And when I refer to rolling, don't be one of those people, well, I bought my contract back and then I sold another one. When I'm referring to rolling, what I'm referring to specifically is this: buying your contract back, paying more for what you originally got. That means you take a realized loss, and then selling another contract on that same ticker, either with a different strike and or different expiration date. That is typically rolling, right? What I'm referring to, taking a loss and then selling a new one. Don't do that. So going back to my point on Mara, listen, choose a stock that you like. I'm not going to pick a $50 stock for a $5,000 account because my account's not big enough. I'm going to pick a stock in which if the price goes down, I'm going to sell another put. People also talk about, well, what happens if you end up holding the bag, Michelle? Okay, what does that even fucking mean? Holding the bag. What does that mean? You know what that means? Okay, like the stock goes down. That happens sometimes. Listen, guys, there is risk in the stock market without question. You might invest in a stock and that stock might go bankrupt. Like for example, what was that stock that somebody was asking me about not too long ago? RZLT, I think it was. RZLT was that biotech company, right? And we had some viewers. I almost bought this stock myself. So we had some viewers like sell options up here, right? When it was like $10 a share, and the volatility was like through the roof, right? And the option premium was massive. And the question I got, I had never heard of this stock before somebody told me about it, a viewer here. And I want to stop and say, my viewers, like 99% of you guys fucking rock. You're amazing. Like, oftentimes you're telling me about different stocks, and I love the engagement and looking at different tickers. I appreciate that. And this ticker in particular was interesting because look it's going up like, it's like slow and steady. It was so interesting because the premium was high, with the volatility was high, but really it looks like a slow and steady stock. What ended up happening, they were like, I don't know a lot about this company in particular, but it was something about, it was all hinging on this one deal through the FDA, and that thing fell through. And what happened? The stock like dropped like a rock. But here's what happens. Here's what I'm telling you. Okay, for example, let's say you have $1,000 account. You don't buy 100 shares of this stock because it's not big enough. You buy this like if you have room to sell another put or buy more shares if it comes down. And here's why. So when this stock drops like a rock, and I did a video on this for those of you who are curious. I don't know. It's for me to find it now, I'd have to look for it. Anyway, I don't want to spend time doing that kind of stuff. My point is this. Let me go back to. Oh, where's my point is this. On this stock, and I'll find the link to put on this description afterward. On this stock, you have a couple of options if you're invested here. It drops like a rock. You can do one of three things. You can sell your shares and take a realized loss. You can do that. That's what a lot of people do. A lot of people like invest in the stock market. They think that they have like an appetite for risk. Something bad happens. They get fearful and they sell their stuff and then they take a loss. That's probably like the worst mistake. And that's why most people lose. One of the reasons why most people lose all their money or most of their money. Okay, that's one option. The other option is you could do nothing, right? Okay, I have 100 shares of RZ, whatever this is, RZLT. This thing drops like a rock. It went from $10 to $1 overnight. I can just put my head in the sand and do nothing, right? If I do that, I would have to wait for this stock to go back up from $1 to $10, or I can do, in my view, the smartest decision of the three choices, and I can buy more shares after the stock goes down. Now, the advantage of doing that is you already traded this stock. So if you traded this stock to begin with, that means that you said to yourself anyway, hey, I like this stock. I think this stock is pretty good. I'm going to sell a put on it. I'm okay buying those shares if I get assigned. I like this stock. And then and then it goes down. If you like the stock, buy more fucking shares. What are you talking about? Like, I don't understand. This is so common sense to me, and it's so like not like consistent with how people think of things. Don't be fearful of that. Warren Buffett, like one of the smartest guys on the planet, he says if you like the stock at $100, if it goes to 90 or 80, it's on sale. Buy more shares. Now, here's a perfect example. This is a textbook example of why you want to maybe do something like that, because it went down to $1.07, right? As low as $1.07. Where's it at right now? It's at almost $3. It's like gone up 300% from when it dropped. Now, I'm not telling you, hey, Michelle, hindsight, right? It's whatever. First of all, again, it's like you want to choose a ticker that you're okay buying, number one. Number two, you want to choose a ticker that's consistent with your account size, right? So if I have a $5,000 account, I could trade this when it was $10. It's $1,000 if it gets assigned. Then you can sell another put. That is the best way to turn a losing trade into a winning one. You know why? Because if I bought 100 shares at $10 and now I bought another 100 shares at, let's say, $2, now my average basis is like $10 plus 2 is 12 divided by 2, $6. And you could check my math if you want, but it's kind of a basic, easy mathematical thing. If I bought 100 shares at $10 and I bought another 100 shares at $2, now I have 200 shares at $6, an average basis, right? So what am I doing? I'm lowering the cost of my shares. That's how you want to trade. And listen, if you're not comfortable doing that, then you probably shouldn't be trading. So that said, this is what spurs this whole like roll my stuff conversation. So people that like these goofy people that like this, like I'm gonna say this goofball right here as an example, whoever this guy is, Brad Finn, he's telling people to roll things. No, don't do that. Because what you're doing if you roll something is, okay, I'm going to buy my contract back. I'm going to spend more money than I got paid. That means I take a realized loss. Now I'm kicking the can down the road. Dude, don't do that. Like, you already committed. Stick with it and buy more after it goes down. So anyway, I hope that helps. Let me go through the questions. Happy Man sent me $10. Oh my gosh. I fucking love that when you guys tip me. I didn't even know that was a thing until recently. I don't know. I think I've gotten like 5 or 6 tips recently. $5, $10. I think somebody sent me $25 the other day. Man, I love that and I appreciate that. So thank you all day long. Let me go through some of these questions. Let me see. Whew. So who's in Valencia, California? I'm heading to California soon. I'm in New York right now. My apartment is a mess. I got some moving guys coming tomorrow, and I'm going to be driving back across the country with my daughter and 2 dogs in my little Porsche 911. I don't know. We'll see how that goes. And it's cold, so hopefully you guys cross your fingers and think about me on the way. Hopefully I don't get any snow or any of that kind of stuff. Okay, so somebody says this. I'm going to go through some questions. Is this helpful, guys? Send me some love if this is helpful. I know I said the word fuck a few times. I'm sorry about that. I think it helps enunciate things. Like, I get very passionate about. First of all, I'm here because I want to help you guys, and I want you guys to live. I love these emojis. Keep them coming. I want you guys to realize I did a video. It's gonna post tomorrow. I've been doing a video every day for 6 months. Man, it gets hard. I'll tell you what, every day. And sometimes like this live stream, I count as a video, so I don't necessarily put up another video. But I created a video for tomorrow. Make sure you guys watch that. It's not really about trading. It's about more what would I say? Spiritual, I guess. But it's gonna be good. My point is, man, your life is whatever you make it be. And I know that trading can give you an amazing lifestyle. Like, you could do it from anywhere. You could be in New York, you could be in LA, you could be in India, you could be wherever you want. And you can also make your own schedule, right? So I don't check in with a boss or, I got to be somewhere at a certain time or whatever. This is life-changing stuff, you guys. Also, I don't want to make this a commercial, but I do want to let people know, if you don't already know, in February, and I only got 20 spots. I think I already have 6 people there, so there's 14 left. In February, I got this great thing going. Monday, Wednesday, Friday, 1 hour each day for an entire month. What I'm going to do is help you guys, whoever's in the program. I'm going to walk through not just like hypothetical trades, but your trades. And not just like, okay, well, let me show you how to like what to click and how to do the trade or how to look at it, but let's manage it afterward. It's off the hook. It's like, it's $500 for $497, which might sound like a lot of money, and it is a lot of money. Sometimes for some people and for lots of people, actually, I think $500 is a lot of money. But if you break it down, like you're getting 12 sessions, it's not one-on-one, but it is a small group. And man, like if I don't, I wish I had something like that when I was trading, because I made way more than $500 in mistakes over my 30 years of trading. Anyway, I'm just throwing it out there, and I'll have that link if anybody's interested. There's 14 spots. And that's not a line either. Sometimes I used to do a lot of Tony Robbins stuff, and I love Tony. Props to Tony Robbins. He changed my life like 10 years ago or so, because he's got a lot of great things. But one of the things that is annoying about him, like his platinum partnership, like, he does these different programs, and he has this, oh my gosh, there's only blah, blah, blah spots left, and that's all bullshit. So what I'm telling you, there's 14 spots, there's 14 spots. It's not a line, is what I'm saying. Let's go through these questions, right? So somebody has a question. If you do a cash secured put and it's assigned with the price continuing to drop, should you be looking to do a covered call to cover the cost of the assigned stock, and what period? Okay, that's a good question. And I got a bunch of questions, and I'm going to go through them all right now. So let me break that down. So the answer is yes. So if I sell a cash secured put, let's break it down like simply, right? So I sell a put, cash secured. That means I have all the money to put up to buy those 100 shares if the price goes down. Anytime I own stock, whenever I own stock, I always want to have a short call tied to those shares. Meaning that if I have 100 shares of Mara, or 100 shares of Applied Digital, 100 shares of Tesla, 100 shares of whatever, I don't know why my screen flicks sometimes. I always want to have like a short call. And the reason for that is I don't care about stock. Listen, guys, I told you at the beginning of this session, I don't care about stock in the sense that, like, I just use it as a tool to make income. I don't get like in love with a stock. I think this stock is amazing, and I think it's going to go to $100 or $1,000 or whatever. I don't care about that. You know what I care about? I care about having the cash to pay $95 for my Chinese food that I ordered on Postmates, or I care about, like, I don't know, spending like $500 in gas going back to LA. I had to think about that for a moment. Or I care about paying $8,000 for my rent, like here in New York, which is what I've been paying. Those are the things that I care about. And stock gains, paper stock gains, don't help you do that. So that said, anytime I have stock, I always sell a covered call against those shares. Now, what I do, and listen, guys, I'm just sharing what I do. Again, there's lots of ways that you can make money. And there's most of the things, like, there's no right or wrong, right? The only really wrong things is like rolling. Don't get me started again. Oh my gosh, that fucking gets under my skin. But what I do when I have 100 shares of something, I sell a call right at what I paid for it. So let's go back to like Mara. I had bought these at $10, right? Now my cost basis got adjusted because I got assigned on that put. So I actually own the shares for like $9.75. And then what did I do? I sold a $10 call. So this is how I do it. I go out 1 week always, and I sell a call right over what I paid for it, because all I want is the income. I don't care about the price appreciation. So yeah, hope that helps. Let's see. Do you go over what to do when it changes to a bear market? Long term, do you still do weekly options? Thank you. And you guys are so polite. First of all, I appreciate that when you guys are polite. Please and thank you, man. That goes a long way. So let me answer that for you. Bear market, bull market. Listen, I think we're in the market's high right now, right? So if you calculate, I don't talk a lot about like geeky kind of mathematics, like values of companies and things like that, because if you calculated the value of stocks, you'd probably see that that a lot of stocks are overpriced based on, the numbers that they have. So to me, that says probably like, the market probably is due for a correction, I would say, for sure, especially when you look at some stocks, like it's like, super, super expensive. Now that said, I try to I don't have a crystal ball. I don't know what's going to happen tomorrow, next week, next month. All I know is I want to create weekly income. So part of the reason why I sell puts and calls, rather, for that matter, every single week and like for 1 week at a time is actually two reasons. And I know I talk about this a lot, but it's important. Like I think repetition is the mother of skill. Like and some people on here today, you weren't on here last week or whatever. So I want to keep saying a lot of these things. I do 1 week contracts for two reasons. Number one, I want to create money every week for myself because I got stuff I want to pay for, right? Number one. And number two, I don't know what the market's going to do. So for me to like tie up my capital for a month, 2 months, 3 months, I don't think that that's smart. Now you could get out of a contract anytime, right? So I could, let's say, sell a put on something, buy it back, and you'd be doing that at the market, which might be more or less than what you paid, right? But I think the longer you go out, the more risk you have. And I want to minimize the risk. I want to make as much money as possible with the lowest amount of risk. It is so easy. I say this a lot too. It is so easy for anybody to make money in the stock market using options, but it's harder not to lose it. So because of that, you want to make sure you focus on realized gains, minimizing or eliminating realized losses, and and just go like hit the ball single. Like I'm never swinging for a home run. I just want to hit singles and win the game and make cash for myself. So you asked, do you still do stuff in a bear market? I don't know if when a bear market's going to come. I just keep doing the same things over and over again. And I also usually trade the same tickers over and over and over again. I kind of don't care that much what the price of something is because, it goes up, it goes down, and that's kind of how that works. So yeah, hopefully that answers your question. Let's see. Jeanette says, do at you saying to let it expire? Okay, so you're talking about letting something expire instead of rolling and then sell another put. I want to be clear about this because I know this is a confusing thing that sometimes people get confused with. Technically, rolling means I'm buying a contract back and then I'm selling another one. Technically, that's what rolling means. Now, when most people refer to rolling, like on YouTube or like other like this guy as an example, right? This goofy guy here. I'm gonna keep using that goofy guy as an example. I put a comment on his thing the other day. I don't know if I have notifications on. I have to see if he answered that. When they refer to rolling, what they're referring to is typically buying your contract back at a loss, right? So paying more for your contract. So you're recognizing a loss and then you sell another one. I do, however, very often close my position and sell a new contract. So we did that together a couple of weeks ago on Mara. All these sessions are recorded, by the way, so you can go back and see these sessions as well. I don't remember exactly when that was, but you'd have to go back and see that. I think it was maybe like 3 weeks ago or something. I bought a put back and then I sold another put. So I do that a lot. Let me explain to you what that means. Like let's say I have a put on Mara. It's like I don't know, let's look at Mara just as an example. Mara is $10.41 per share, right? So let's say I have a $10 put and I got paid, $20 for that put. I'm just going to use round numbers, right? And let's say now time has gone on and that value of that put is $5. I pay back $5. I originally got $20. I pay back $5, right? That means I'm creating myself a realized gain, right? So I got paid $20. I'm giving $5 back and I'm closing that out. And then I can sell a new put. I do that a lot. So technically that's rolling, but that's not what most people refer to as rolling. When most people refer to rolling, they're talking about, you sold a covered call, the stock rips higher, you buy it back at a loss, and then you sell another call with a higher strike, or you sell a put and the stock is dropping and you don't want to get assigned, you don't want to buy the shares. So you buy that back at a higher price. So you lose money and then sell another one. I never do that ever, but I do close my positions if I'm getting, like if I'm locking in a gain, particularly on puts. Like, listen, it's so easy to make money and it's harder not to lose it. And if you sell a put and you capture like, 80, 90% of your gain, there's nothing ever wrong with capturing a realized gain and then moving on to the next trade. So hopefully that answers your question. So that's what I do. So I never roll anything ever. I never buy my stuff back. I try not to ever take a realized loss. I think that's important. I want to take realized gains and I don't want to take realized losses. Take your profit. The market doesn't care about your feelings. That's right. Listen, wait, I think somebody said this about like a sport before. There's no feelings in basketball. Maybe that was in a movie. There's no feelings. There's no emotions in the stock market. This is not an emotional thing. I mean, if you get emotional, you want to like squash that. Yeah, that doesn't belong here at all. Let's see. I'm in a Facebook group where one guy posted his wins and they were nice. He was asked if he rolled and he said never. And I thought of you. Yeah, listen, I have to say, like I've said this before and I try to be kind, right? First of all, I want to commend you guys for being here because I think like you're trying to better your life, right? You're clearly here because you want to, trade better, learn more about trading. I think that's amazing. And I love that. So I always want to honor that. And I also don't want to ever be like unkind to people. I think my life, I don't know if it's like what sign are you kind of thing. I mean, I'm an Aquarius. I don't know if it's an Aquarius thing or not, or maybe it's just me. I think a bulk of my life I have spent, and sometimes I say things that are not kind to people. And so my point is, especially as I get older, I get very much more conscious of, I want to be kind to people. So I don't ever want to be rude. But at the same time, sometimes there's only like, I don't know, like if you want to say something, there's only like one way to say it sometimes. Like it is the dumbest thing in the world to ever roll a covered call. Like there is absolutely zero, I can't think of any scenario on which you'd want to do that. And rolling a put is probably the second dumbest thing. And I try not to use those words dumb or stupid or whatever, because they're like negative, not nice words, but I just don't know another way to say it. So yeah. Anyways, that's my thing and I'm sticking to it. Let's see. Oh my gosh, a couple more of you guys sent me Joe Holt sent me $5. Sigma and Guy sent me $10. Man, that makes me like tear up. I am so appreciative of that. Thank you. I don't know if you guys can see that on my screen. Let me go through and Happy Man originally, I think I said that $10, $9.99. Oh my gosh, that's amazing. You guys rock. Where the heck was I? Sorry, I got so many. And plus I feel like I can't even, when I'm using my Mac, I have a MacBook, I'm a Mac person. And I'm always like pinching the trackpad or whatever, but I can't do that on this platform that I'm using. So I'm like trying to strain reading these comments. All right, let's see. So I'm just going in order, by the way. So Glenn says that it's challenging finding a stock in an appropriate price range. I'm looking at UMAC. Oh, somebody asked me. Maybe it might have been you. Let's look at UMAC now together. And I like that stock and I believe in it, but would it still fit option selling criteria with a 25 bid ask spread? I don't know. Let's look at that together. UMAC. Let's see. Unusual machines. I don't really know what they do. I never traded this before. I think it might be you or it might be somebody else who posted this on a comment recently and asked about this. So I looked at it briefly, but then I never really looked at it much. So it's $18.53 per share. So I always start like this. I look at a 1 year chart, right? Where's the stock been, right? I'm just looking at 1 year. Sometimes I look at these little icons. This just shows you earnings. And earnings is positive. So earnings, what does that say? 31 cents. So I do look at like, okay, is earnings positive or negative? If a company has negative earnings, it doesn't mean that they're bad, but it means that they're not profitable, right? Or they don't have profit over that period of time. So I look at that just to kind of get a sense. Okay, they're at a 52-week high, right? So they're pretty high. Let's look at the options chain. So when I look at the options chain, I always want something that has weekly options, because if it doesn't have weekly, that means it doesn't trade as often enough, as frequently as other stocks, right? So this one has weekly options. So we'll look at the 23rd, and I always look at, here's how I have my sheet, like bid, ask, last, the net, the delta, the implied volatility, and then sometimes I look at open interest and volume. So this is showing you, this is the spread that he's talking about, right? So let's say if I sold an $18 put that expires Friday, the bid is 65, the ask is 80, and it last traded at 70. That's not super wide. So here's the thing about spreads and bid and ask and how that works. If I'm looking at like a company that trades a lot, like, I don't know, Tesla, let's say. So Tesla trades a lot. It's $4.18 a share. And I'm going to look at, let's say, a $4.15 put as an example. 5.4, 5.45. Well, now it flipped. But it's usually very, very tight, right? So there's not a big difference between the bid and the ask. But sometimes when you go with a stock that's not traded as frequently, it's got a little bit wider of a bid to ask spread. But this isn't super wide. If I put an order in like this, I would put an order in at like, let's say 70, maybe 75, you might get filled. This has super high implied volatility. Two things I always do before I put an order in. You want to check when earnings is. So this volatility is very, very high. Sometimes that's because earnings is coming up. So here's how you do that. UMAC earnings, I'm just going to go like that. And then this is going to tell you, well, it usually tells you right up front, but let me do it. When is next earnings? UMAC stock. I don't know. You could type it in something like that. And March 26th. So that's not, so the reason why this implied volatility is not because of earnings, because earnings is not coming up. The other thing I always do is I always look at what are the big players doing. So SEC Edgar. So here's, I'll show you the whole thing on how you do it. Type in SEC Edgar, and you're going to go into the filings page. This tells you, listen, anytime there's a big, a public company, anytime there's an officer, director, or controlling shareholder of any publicly traded company, if they buy or sell stock, they have to disclose it to the SEC, right? The Securities Exchange Commission. And then they disclose it to the investing public. Now, a lot of people don't look at this stuff, but I look at this when I put money into something. And stay tuned, because, man, I've been spending a lot of time on apps, like creating these applications that's going to like revolutionize trading, because I'm a trader. I've been, so here's the thing. Let me just, sometimes I feel like I go off on a tangent, but I promise you I'm going to loop back. When you go on YouTube and you see a lot of these people, I know I keep picking on this guy, this poor guy over here, whatever his name is, Brad. I keep picking on poor Brad. A lot of times you go on YouTube and you see people like this spewing this nonsense that's so not true. But a lot of times people don't know it's not true, right? You don't know what you don't know unless you know it, right? He's making money on his courses, and I have courses too. Sometimes I don't really spend a lot of money, like a lot of time rather, on that stuff. But my main thing has been trading always. So I've been very passionate. I do my own trading, and then I've been passionate about building these applications, because as a trader, I know what people want, or what I want anyway. Like, I know what I want. So I'm spending like a lot of time building these applications that are gonna like be rock star and revolutionary. Anyway, this is one of those things. Let's pull up UMAC, and I just want to see like, okay, well, what's going on? Is there some dilution that's happening? Are there some people that are buying and selling big blocks? This can be confusing, so I'm not going to spend a lot of time on this. Also, we've been going for 50 minutes, and I want to get to a lot of the other questions. So I don't want to spend a lot of time, but I do want to point to this. You want to take a look at some of these things, like a Form 3 is like somebody new buying a bunch of shares. So you can take a look at it. Okay, what is this? This is Rochelle Stacy Wright, whoever that is, Chief Revenue Officer. This is like people that are like insiders. They'll have like warrants and things like that they can turn into cash. So this isn't all that important that you want to be looking at. So let's go on to the next thing. A Form 4 is anytime somebody buys or sells new stock. So A is for acquire, right? So this person, Jeffrey Thompson, he's the director of the company. He just bought 340,000, or actually 3,000, and now he owns 340,000 shares. Now, some of these, when you see zero, like he didn't actually buy this on the open market. This is restricted stock, which is also not all that relevant. What I'm looking for is like, let me give you an example. Warren Buffett owns like a whole bunch of, 8 million shares, let's say, of Delta Airlines. And then he sells a whole block of Delta Airlines. And let's say I'm looking at Delta Airlines. I want to know if he sold a bunch because I think he's kind of smart. And if he sold like, 1 million shares or something, maybe I want to like take a time out and not trade this. So me personally, I use this page here, this Edgar page, to kind of just get a sense on what's going on in the stock. So I don't want to spend a lot of time. And also there's a lot of different forms, and the applications that I'm building is going to use this. But I just wanted you to know, as we're looking at UMAC, that's something that might be relevant to you. So you had asked originally about bid-ask spreads. I don't think they're that big. I mean, I think, of course, the stock is smaller and it's not traded as frequently as, let's say, a Tesla or Google or Apple or something like that. But it's not horrible. Like sometimes you'll see, like here, for example, like if I go lower on the strike prices, $5 bid or 5-cent bid to 25-cent ask. And by the way, as I'm saying these things, sometimes I'll say $5, sometimes I'll say 5 cent. Here's what I mean by that, because I want to explain this. Sometimes I have people that correct me in here, which sometimes I don't mind. Sometimes it's a little bit overbearing, but my point is this. If it says 0.05, it's 5 cents, but each contract represents 100 shares. So 5 cents means $5 goes into my bank account. So sometimes I'll use those terms, synonymously, just so you know. So this is kind of a big spread, 5 cent to 25 cent. But here, 55 cent, 80 cents, kind of big. But if I like the stock, I wouldn't mind. Now, when you have a big spread like that, it's harder to get in and out. So oftentimes you'll have what we call slippage. Like, you don't get as good of a fill and you maybe lose $5 here, $5 there, that kind of thing. So that's a decision that you have to make for yourself. Let's see. How are these questions? Is this helpful for you guys? Is this good? I want to deliver value. I put on my page not long ago, and I encourage you guys, I meant to do that today. Today I was going to draw for the winner. So I had on my page, and I also sent some emails to the people in my inner circle recently, like, hey, I'm building these applications. Tell me what's important to you. I know it's important to me, and I know the stuff that I'm building, but sometimes like I don't want to presume to know what's important to you guys. So I did say that I was going to draw one person, and then that one person gets like this free session one-on-one. I'm going to do a free session with you, and I'm just going to try to help you and point out maybe here's the good stuff that you got going on. Here's what I would recommend changing. Obviously, it's always your decision, right? Like I'm not telling you what to do. I'm just giving you advice. I wouldn't even say we're not supposed to say advice because I'm not registered as an investment advisor. I'm just trying to educate you. That's all. And I meant to have that prepared for today, but I didn't have that prepared. So for next week, I'm going to give you guys another week to give me some more information. Next week, I'm going to draw 2 names for being tardy on that. My apologies. So if you haven't already done that, whatever you're struggling with, what do you need help with? What would you like help with? is confusing to you, and then that way I can gear these sessions and the applications that I make toward helping people. Let's see. So hopefully that answers your question, Glenn, about that UMAC. Also, took me a while to find UMAC that I believe in. Would be happy to be assigned and would be happy to own more if the price drops a lot. Man, you got it spot on. Here's the thing, guys. How many stocks are out there? I think there's like, I don't know, thousands of stocks. You got to be able to find a stock that you like, that resonates with you. And if it drops more, you buy more shares. Usually the price dropping is just a function of the stock market. The stock market, the way it is just the way it is. It goes up and it goes down. That's it. And over the long term, good stocks go up. That's the function of the stock market. So usually when your stock drops, it's not because like some big bad thing happened. No, it's just like, that's just what happens. Like, yeah, maybe there's some negative news and it brought it down, but that's typical. That always happens with stock. So yeah, you got it spot on. Bravo to you. Let's see. Happy Man said, sorry, I'm late to class. No worries. Listen, this is all also recorded, so no worries. There's no time schedule for these events. I sold my first put on Comcast today. 10 days, strike price 27 with 56 premium 100 shares. Dope. Let me see what's the ticker. Comcast ticker. So Google is a wonderful thing. CMCSA. Let's take a look at that for Happy Man. I love your name too, Happy Man. Everybody should be happy, huh? That's dope. CMCSA. Let's see. CMCSA. So Comcast. So what do I do first? I always take a look at the chart, right? So Comcast is trading. Here's our price, $28 a share, 28.06. I love these gaps. Look at this gap. So it opens lower than where it was, and gaps will typically fill, meaning this, see all this black space in here? And you see how this went up and filled that gap? That's typical. That often happens. I don't talk a lot about technical analysis, and I don't use a lot of technical analysis. MACD indicators, RSI, Bollinger Bands people talk about. I don't use a lot of that, but things that I do use are gaps as an example. So let's see. Let me go back to, let's see. Happy Man. Let's see. 10 days, strike 27, $56 premium. So that looks amazing. So 10 days, you probably, now just to be aware of something. So this is actually a good learning experience. So as I look at the chart, there's a couple things. So when I go like this, I see a dividend pane. So I typically don't trade a lot of dividend stuff. They can get a little bit confusing. That dividends aren't bad though. Dividends are like the stock is like sharing its profits with the shareholders, right? Which is actually a good thing. When you look at the options chain though, you'll see that it looks weird, right? So 23 January, we have two of them, right? So this is weekly, and then this is like this other thing for 4.5.0. It looks weird. That means that you want to make sure you sell the correct contract. So this is a good thing. I don't know if you, let me know in the chat here if you knew already what I'm talking about here, or if you didn't know. A lot of people don't know this, so don't feel bad if you didn't. But here's what this means. You can, you have to choose the correct chain to sell your contract on. So there's this chain here, right? This chain, or there's this chain here. And the difference is delivering the dividend that is paying. So you want to just make sure. Now, sometimes also, like me, I trade through Schwab as an example. If I went to put an order in like this, because I have had this happen before, not with this particular stock, but with other stocks. When I put this order in and I go to put it online, oftentimes it won't let me put an order in online. I have to call them because they want to make sure that you understand what that means. And the market just closed. We've been talking for an hour. That's a long time. I hope this is value for you guys. But anyway, going back to Happy Man and Comcast, sold your first put. Man, I say bravo to that. Like, listen, paper trading, people talk about paper trading. I don't see a lot of value in paper trading. I think it's better to just put a trade in, and hey, it's like a learning experience. I'm going to give you an example. I love giving analogies. Man, I lived in Bali for a couple of years, Bali, Indonesia, right? Until recently, actually. And anybody here been to Bali? Let me know if you've been to Bali. Send me some love. Send me some hearts if you've been to Bali. I lived in Ubud for a while, which is beautiful. It's like very spiritual, it's a super cool place. And then I lived in Uluwatu for a while, which is over south by the beach. I lived in Canggu for a while. Canggu is like sort of like man, I'm 50, 52 actually, if I'm being precise. Canggu's got like a lot of 20-year-olds, that kind of thing. Here's my point. I learned how to drive a scooter in Bali, right? Anybody drive a scooter or a motorcycle or anything here? Man, it was like, I was petrified. First of all, I don't know, for those of you guys who have been to Bali, like there's no like road rules, right? So you kind of like drive wherever, drive on the sidewalk, like sometimes it's hard to cross the street. It was so hard for me to learn how to drive a scooter in this foreign country. But how do you learn? You just do it. You got to just do it. And options trading is the same thing. So happy man that sold his first put today, man, bravo to you. That's dope. You did what so many other people probably wish they could do or want to do, and you you did it. So that's cool. I'm happy for you. All right. So, oh my gosh. Let's see. I got a lot of. I'm going to skim through some of these questions because we've been talking for an hour and I got a lot of questions here. So maybe I talked too long. Let's see. Let me just. I'm going to try to get. I'm just going to read these briefly for a moment. And I want to try to help as many people, especially in the group, as possible. So I want to try to highlight some of these. And Metu. So somebody said sold the put on Metu, METU. I think that's the Meta leveraged contract. Metu ticker or Metu stock. Just be careful when it comes to, it's the 2X. I want you guys to just be, I trade these sometimes and I have in the past. I don't do a lot of it. I just encourage you guys to be super careful when it comes to trading these, because these are products that they have a lot of, Nina, can you take those out, please? They have a lot of stuff in there that you're probably not familiar with. They're like using swaps and warrants and things like that. And in my opinion, it's a little bit of, I don't want to say crookedness. I don't know how to say that in a nice way, right? So like, remember back in 2008, the stock market, basically that was like the financial crisis, right? And what started the financial crisis was all of these contracts that were sort of confusing, that became super popular, that a lot of people were investing in, and ultimately it wasn't sustainable. So in my view, these are a lot of that. So so just be careful with that. But at the same time, congrats for jumping in the game, because you can't win the game if you don't get up at bat. Bravo for that. Chinese food. Yeah, Chinese food is the best in New York. Let me tell you something. Bagels are the best in New York City. Chinese food is the best in New York City. There's certain things in certain geographical areas that are like the best. Let's see. I'm gonna try to skim through these. I'm here from your Udemy course, and you've definitely been a godsend. Man, that humbles me. So you guys saying things like that is humbling me, and humbling to me rather, and I appreciate that. I have taught, like, let me tell you something. Let me show you guys something on Udemy. Here's my Udemy stuff. I have taught, where is it? I think like 20,000 people or something like that. Let's see. Courses. Where do I see that? I'm going to show you guys. I'm going to show you guys all my secrets here. students. Where is it? Students. Oh, wait, I don't want to show you guys names. Wait, let me go back. Hang on. Hold that thought for a second. I want to show you guys. Oh my gosh, where is it? Here it is. Students. So I have had like students all over the world. Check it out. All over the world. 16,000. I think depends on where I look this up. It's in different places. 16,000 students. Reviews. I should know. I don't really look at this very often. Oh, look at this 1.5 star. Oh my gosh. What? That's kind of crazy. I don't make much money here either. So like since lifetime, like it's not much money, $13,000. Like oftentimes I make, let me show you guys. I just want to show you guys $3, $3, $3, $4, $3. So I guess my point is this, man, I have spent my entire life, right, helping people like, actually, let me back that up. I've spent my entire life like creating my own accounts, right? Like trading for like almost 30 years. 1997 is when I started. And then a few years ago, I think I started Udemy like maybe 5 years ago or something. And I do that because I'm passionate about it. So it's not like I just want to go back just for a moment, not to like just keep talking about the same thing, but I want to go back to for a moment to kind of compare against people like this as an example. So a guy like this never made money trading, I don't think, because he says the wrong things, like clearly like way off base by, you know, fix your trade, your covered call by buying that back, and here's how you do it. And then he has courses that he sells.
Nationwide is more than you think.
Oh yeah, their estate planning resources help keep me updated on the latest rules and client opportunities.
Speaking of, I need to leave my quarter zip collection to someone. It's complicated and massive.
Tasteful though.
So here we go.
Yeah.
Use option.
Velo presents more.
Carol,
Like,
could you hit the
usually
fan?
people like this, I don't know how much it is. Oh, 100.
More.
$198.
It's
Okay,
time to
I'm not
demand
dogging you
more.
for that because listen,
Velo,
everybody should be
more
making
instant
money.
enjoyment.
And I think I should.
So
be
as
making
most
more
of you
money
guys
too
know, I am
sometimes, because
mostly
I
a
help lot
weekly
of people.
expiration
But my
trader, meaning
point
most
is
of my
this.
wheel stocks are going to
Like, I
be
make
just
$3-4
weeklies.
on Udemy.
Sometimes
It's
when
not that
my
much,
life gets
and it's
busier in the
life-changing.
summertime when I'm
This
not
stuff
working
can
as much,
absolutely
sometimes I'll go
change your life.
monthlies or if I want to slow things
let
down.
me-
But most of the time, if
Wait,
you see
I
my
hear
videos,
this
my
talking
average trade
and
is
you
usually
talking
about
at the
4.
same time. So let me get out of that. Okay, let me not get off on a tangent. Let's see. But I appreciate you being here from Udemy. Thank you. Props for that. Yeah, that's pretty cool. How do you make $8,000 a month? Are you trading large companies like Nvidia, Tesla, etc.? Yeah, good question. So those are my favorites. Nvidia is one of my favorites. Tesla has probably like for a long time been one of my absolute favorites. So I've been trading Tesla for I don't even know how long. It's got a lot of volatility. Volatility is a couple things. Number one, you know, you're getting paid more for the premium, right? You're getting paid more premium for the risk that you're taking. And then number two, when it has a lot of volatility, it could come down, and then it gives you more comfort knowing that it's very likely to pop back up again, right? And when we look at Tesla, for example, like let's look at Tesla, and we'll look at it's a $400 stock, $419, and if we look at the premium, you know, let's say we look at let's say a 30 delta, 30% likelihood that it's going to drop to that price. You know, it's paying $340. Nvidia is probably not as much, but pretty similar. It's a little bit cheaper of a stock, 178. What are you growling for, puppy? Let's see. 178. So, I mean, it's a little bit less expensive. So you'll see that the contracts are going for a little bit less. But yes, historically, I do trade more expensive stuff. And then also historically, I've always used margin. I'm not going to talk a lot about margin in this session. Margin can help you make a lot of money, but it's also, what are you crying for? It's my puppy crying in the background. I don't know if you guys can hear him. Margin can help you make a lot more money, but it can also like blow up your account. So you definitely want to take a lot of more care and caution if and when you're using margin. So let's see. So glad I found your channel. Thank you very much. I appreciate that. How do you send money? So Jeanette says, how do you send money? I'm not sure actually. So I don't know if you guys can see it on my screen. I don't know if you can. Hey Nina, please come take care of the dog who's whining. It's distracting. I don't know how you send money, but sometimes I get these pop-ups that say you got $10, you got $5. I'm not sure. You might have to Google that. Maybe I'll put instructions. I don't know why he's whining. But thank you for asking. Let's see. Have you been assigned early? This is a good question. I got so many questions here. Have you been assigned early, i.e. before Friday afternoon? Yes. So let me go over that. That's a really great question. Here's how assignment works. Anytime your contract goes in the money, you can be assigned. So it's up to that individual person that owns that contract. What I mean by that is this. Like, let's say I sell a put on Tesla, right? I sell a $400 put. When I put that contract in, that order, it gets routed through my computer, basically, right? So I don't want to get too detailed, but there's somebody that actually matches up the person that's long that contract. So me, I'm the person that sells it, and that might be tagged to, Jane Doe in Oklahoma City, whatever. So it's up to her. Once that contract goes in the money, she could assign that if she chooses. Now, most contracts don't assign early, and the reason for that is because most people are not hedging their accounts. So people trade options for a variety of reasons. Like, people will buy options sometimes because they want to hedge their position. I'll give you an example. Let's say I own 1,000 shares of Tesla, right? And that's a lot of money, right? Because it's like $400 a share times 1,000 shares. It's a lot of money. And if Tesla goes, no, this is just an example, by the way. If Tesla goes down, I don't want to lose my shirt. So I might buy puts, as an example, if I'm a stock holder, and if I want to hedge my account, I might buy some puts. So sometimes those are people that buy options. However, most people that buy options in the marketplace are not those kinds of people. They're like gamblers, and they want to buy a put on Tesla because they think the price is going to go down, and they want to invest, $100, and they want to turn their 100 into 1,000 and, flip their money like that, like get this asymmetrical rate of return. So those kinds of people make up most of the market. Now, because of that, they're not assigning anything. They just want to make money. So usually things will not get assigned until the close on Friday, right? But anytime it goes in the money, that risk or option choice up to the person that owns that contract is there. Let's see. So you mentioned weekly options. What are your thoughts on weekly calls for TQQQ versus QQQ? I don't like QQQ. QQQ is like the ETF for tech ETF, right? I mean, I like it. I like it because it has, I think, if I'm not mistaken, daily expirations. Yeah, it does have daily 20, 21, 22, 23. So it's got a lot of time, like a lot of contracts that you can trade. But man, this is a $600 ticker, and the volatility. Like, let's just look at 26th, and let's look at, look at the implied volatility is kind of low. I have lots of videos on SPY and maybe not so many on QQQ, but it's the same idea. The rate of return is not that good, in my view, so I don't like it. Versus TQQQ, I think that's the leveraged one, right? TQQQ ticker. Yeah, so that's the ultra. You got to be careful with these, though. They're very. You got to look under the hood. These will blow up at some point, I believe. There is so much. I did how much money is in leveraged ETFs, right? So let's see. So right now, $239 billion in leveraged. This is just a quick Google search in leveraged ETFs. These things, it's kind of like, again, I want to go back to 2008, the subprime debacle, right? Like people giving out mortgages to people that couldn't didn't make enough money to afford that kind of house. That's like, this is like a implosion waiting to happen. So I don't like either one of them, necessarily. So yeah. Let's see. Can you look at Comcast? Wait, did we looked at that already? Was that good for you, Happy Man? Let's see, Comcast. I never traded Comcast before. I would definitely, you want to check that out though. These the dividend, the contracts. So let me know in the comments here if you did that or not. Let's see. Oops, what the heck was that? Are you guys still with me? Let me know in the chat if you guys are still with me. I think my program closed. I don't know why that happened. Yes, I see some hearts. So I'm not very tech savvy. All right, let's see. I'm going to go through all these questions. Somebody's talking about bouncing off 20 MA. I don't look at a lot of that stuff. Listen, that's not to say it's bad. I don't look at a lot of pricing. Here's how I would look at Comcast. I would look at the company. Who's it run by? Does that seem like a great CEO? Do they get paid? Are they incentivized? Do they get paid stock options for I don't know, making money, for the company being profitable? What sort of climate do they have? Like I try to choose, okay, well, fundamentally, is this a good stock that I resonate with? The price, I think, is always secondarily, because I just want to make income via puts and calls. Like if you're selling, let's say 30 delta, like kind of out of the money, and you're just taking in some income on a stock that you are okay buying, if it goes down, I mean, that's a good thing. So I don't really look at the price that much. I think if you start going down those rabbit holes, it's a lot of work, man. And like you can only put so much stuff in your head. So yeah, that's not really my jam. Wealth Simple. I never heard of what, maybe I heard of them, but I never use them or anything. I can't place cash secured puts, so I only do covered calls. I would not trade with a company who only lets me do this and doesn't let me do that. There are so many different broker dealers out there. I would try to go somewhere else. So different broker dealers will have different requirements. Like maybe they ask you before you open an account, like how long have you been trading options? How much experience do you have? Do you have experience in stocks? That kind of thing. But I would, if I could only do, let's say, covered calls and not sell cash secured puts, I wouldn't want to do that, because I start off with selling a cash secured put. That's how generally you want to start off with. You don't want to buy the stock first. Probably not. Me, I want to keep my money in cash, sell a put, and then buy the stock if it goes on sale. So you could just look at a different broker dealer. I mean, there's lots of broker dealers out there. I use Schwab. I've used Interactive Brokers before, and they're pretty good too. Their service is I never really liked their customer service before, but that was a bunch of years ago, so maybe they're better now. Tasty Trade. Some people have used Fidelity, Robinhood. I don't know. There's no shortage of brokers. Sold a couple calls today. Bravo. Good job. Let's see. Also, by the way, I want to say this because a lot of people are saying hey, family, man, I like to see people connecting, and I like to see you guys messaging. And sometimes somebody asks a question here and somebody else answers that. Man, that's a community. And I think there's not enough communities in the world. Like when you can get a community together, a bunch of people or a few people or whatever that have similar interests, that's a beautiful thing. And for a while, I really tried to make that Discord thing work. And Discord was, for those of you who don't know, I don't have a Discord channel. So for some reason, there have been people on Discord and other platforms too, pretending to be me. And maybe I should be flattered by that. So they use my face, they use my name, they use all my stuff, but it's not me. and they're scammers. I don't know, like asking for your account information or trying to sell you shit, and it's not even me. So I don't have Discord anymore, but I will at some point really shave off some time to figure out how I can provide a community, because I think that's important. I think having an area where people that are like-minded talk about things with one another. So I haven't given up on that idea. So know that. But Discord is not for me, and I will have something new soon, so stay tuned for that. All right. Bought some TQQ shares today. When it rebounds, I will sell some call options. Well, that's one way to do it. I never do that. So I only, like, if I buy some shares today, I'm going to sell a call today. That's how I would do it, because I never want to have stock shares without having a covered call against that, because the whole purpose is to make income, and I don't want to be a holder of stock. So let's see. Can you share the link of your Udemy course? That is, where is that? That's in my YouTube somewhere. So if you go to, I don't know if I should be clicking in my settings, maybe not. Showing, I don't know. It's in, if you go to my YouTube page, actually I'll go here. I'll show you here, YouTube. If you go to my YouTube page, which is here, and you click more links, it's here, Udemy course. I'm going to put another one up here soon. This was a course that I did a long time ago, a while back, but it's still very relevant, because listen, these things don't change. So these concepts, selling a put, selling a covered call, they're, markets up, markets down, markets sideways. It works all the time. Create your own course platform. That's a good idea. Let's see. CLSK. Actually, let me scan through some of these things. Happy Man said I did check, and I checked the 8K 10Q. Oh, good job, Happy Man. So check it out. He checked the Edgar page, and he checked the 8K 10Q 13D 13G. Those are all the insider forms. But what I meant was check that you sold the correct contract, because you see how they have these different option chains. So there's this one, and then there's this one, and that has to do with the dividend. That's what I meant to say. All right, let's see. Just click the little box with a $sign in the chat. Oh yeah, here it is. Oh, check it out. Show your support for cash flow option queen. Super sticker, super chat. Oh, that's cool. So that's how you do it. So that's how you can do a tip. That's awesome. I love that. Boo scammers. Yeah, there's so many scammers on Discord. Yeah. So also, I don't know, for those of you guys who have been around my channel for a while, I used to do more free events. Like I did a free event. I don't know, it's like a free event, like 2 hours, 3 hours. People sign up, they don't pay anything. And literally this free, I don't think I've done it in a while. And here's why, it just made me kind of bitter. Literally, I did this maybe like 3 months ago. And right after I did this event, it was online that somebody was selling. Like they basically, I don't even know what you call that, just took all my content and put it online. And yeah, so I haven't done a free event since. So now I'm doing and then I changed my Discord to be paid, and I thought it would get the scammers out. But I did notice that I think a couple times somebody paid and then they canceled. It was $5. I think it was cheap. They paid, then they tried to access, other people in the group. Anyway, don't be flattered by people impersonating you. All right, I think, oh my gosh, it's 4:24. So we went for like an hour and a half today. Listen, I think I'm going to wrap it up today here. And I was going to put a trade in because I haven't put a trade in, but instead we kind of walked through all these other things. I really, really, really hope this is helpful for you. I want you guys to get as much value as you can, right? So like the whole intention of me teaching you is I want you to learn. I want you to message me or put a post or a comment on YouTube. Hey, I sold my first put. I made $56. I made $100. or a month from now, hey, I made like X dollars for the month. Man, that makes me happy. That makes my heart happy. So send me an email as well. You know, what you guys want to see. That way I can tailor my applications to that. Stay tuned for some new stuff. If any of you guys are interested in the February program, I'm going to put the link in here as well. Yeah. And I think that's it for now. I want to say thank you for your attention and props to you for being here, trying to change your life and learn how to trade better. Listen, I'm not a guru, but I have been doing it a really long time. And I think a lot of the stuff that I have, you know, has a lot of value and knowledgeable and that sort of thing. And I do truly come from a place that I want to help you guys. So hopefully that kind of, you know, shines through there. Anyway, thanks again. And I will see you guys next Monday. And next Monday, just a heads up ahead of time, I think I'm going to be traveling. Well, let me see what Monday is real quick. Just don't go anywhere yet. Next Monday. Oh, Monday is my son's birthday. Monday is the 26th. He's going to be 21. So shout out to Adam. And I will, I think, most likely be driving. So I may, or I'm going to try to do this same program at 3 o'clock. There's a slight chance, depending on where I'm at, you know, if I have service or, you know, driving or whatever, that time might be changed. If you're subscribed, you should get a notification on the time of these live streams, but just, you know, just so you have a heads up that it might be different. Anyway, thanks again, and I will see you guys next week. Love to all of you. See you.